Traders, what is up? Hope you guys are excited to trade today. If you were bullish, you printed, right? If you were holding positions over the weekend, man, when that thing gapped up, you made some money, right? Let's just take a quick look at some of the gains that were made on the S&P 500 today. This is the SPX index, which is essentially just trading the actual index itself. These 7,500 levels down here look like they really printed well. You could see if you positioned here when they got everyone basically trapped, right? That contract was $4,700 on July 2nd. And boom, that's what you're looking for in the market, right? That's why we look at the price of the options. Right there, 2 o'clock, that contract was only $370. You can see right here, because remember, these things trade even over the holidays. Right here, you can see $2,000, $3,600, and ultimately, you know, even overnight, these things are trading, right? Which you can trade, but you can't execute that position. I believe 9:25 to 9:30, which is not a coincidence, right? Right here, you could position right before the bell, and then boom, when the market opens, you're at 2,500, right? You're scalping almost, you know, $800 or $900. Not a coincidence, right? They help balance out, the market makers start balancing out their risk. You can see right here where it hit 1,900. And today we were bullish, right? We just kind of walked up the price action. A lot of consolidation and stalling in these levels. And just for simplicity, I like to keep this chart where it's easy to understand. But you can see right now it's selling for 4,180. Your initial risk, if you were expecting a fake out and a gap up, was only $370, right? Not bad returns. For every $370 right now, you know you're selling for 4,000. So what are you sitting at with 10 contracts, right? Almost 41 grand. Do the math on that yourself, you know. Definitely huge gains made in the options market on zero DTEs and also the close to expiration ones, right? But on the flip side, right, let's look at some of the bearish sentiment. You can see here the level today, 7,500, was very, very important for the market. These bears got destroyed. And just to give you an idea on the flip side how much money you can lose, right? You can see right here on July 2nd, those contracts were $7,000, right? So if you didn't toss those bad boys along, turning 1,000, 1,200 into almost 7 grand, you can see right here, man, they always try to bring them back to break even. Boom, they got you trapped, right? They've already set the trap right here at this level at 3,600, and then as the market's closed, right, they're already trapping all the all the bears that are trapped. When the market opens, you can see right here today, this is the slide that you're looking for when you're trying to find entries and options. You're really watching the price, but that's what Theta Burn looks like, right? You can see right here at 10 o'clock a.m. today. Where's your 10 o'clock level? Right here, man. They just basically decided to go ahead and crush the bearish thesis. And right here, this is just the Theta Burn. They're trapping anyone who went short here, these levels here. And just one more trap for the cherry on top, right? At 1 o'clock or so. There was a nice trade in this area if you were bullish, right? But look how they just trapped them again right here. Once you got bearish, they hit this significant level in the market at around 7,527. Almost hit it within the dollar, right? And you can see right here, boom, they just crushed the rest of them. That's all this is, right? No one's like, oh, wow, I'm so excited. I'm buying at the top. I want to buy the market at the top, right? This is just market makers hedging their positions and trying to become delta neutral. Put walls are very important. You want to Google that. You know, trying to find out where the put walls are on the dailies for the SPX, because you got to remember, this thing really does move the entire market, right? If you're not paying attention to SPX, you shouldn't be trading, because this right here is going to bring the market with it no matter where it goes, because that's where the algorithms are doing all their hedging, right? But other than that, man, you guys have a good Monday. Hope you had a safe 4th of July, and I'll put another video out soon. But that is essentially the areas of the market you don't want to trade in, right? When you're just seeing it consolidate. I mean, bring it up here on some real price action, right? You can see this consolidation levels very significant for the market. And if you really bring it back all the way back to where we started, this is where you don't really want to be trading, right? A lot of this zigzag, slower moving price action just completely destroys the Johnny-come-latelys on the bearish and the bull side. So you usually want to stay away from that and really look for trades like these in here. You just in and out in 10 minutes. You caught the trade in your favor, you 2 or 3 extra money, and now you're out and you're riding that trade right back up, and you're 2 or 3 extra money again on the bull side. And that's really the way you can play it safer in the market, so you're not caught holding bags like the bears were over the weekend. All right, take care, and I'll talk to you soon.